Today, I want to show you a real-life example on how to consolidate multiple debts into your home loan and save yourself a few dollars. First thing for you to understand is how much usable equity you have in your current property, because for you to consolidate debts into your home loan, you have to make sure you have sufficient usable equity in your home. So let's work out if you have equity in your property to begin with. And I'm talking about usable equity. So as long as the client doesn't need to consolidate more than $300,000 worth of equity, they can consolidate this debt into the home loan without the need to pay any lender's mortgage insurance. Now, if you want to understand how to use this equity for other purposes, I've got a video up here that will show you what equity can be used for. Good day everyone, I'm your host Tony Xia and thanks for joining me on another episode of the Mortgage Chat. Today I want to show you a real life example on how to consolidate multiple debts into your home loan and save yourself a few dollars. First thing for you to understand is how much usable equity you have in your current property, because for you to consolidate debts into your home loan, you have to make sure you have sufficient usable equity in your home. So let's work out if you have equity in your property to begin with. And I'm talking about usable equity. Now first, let's work out how much usable equity you have. For this example, the client's property is worth $1.1 million and the lenders out there will allow you to borrow up to 80% of the value of the property without paying any lender's mortgage insurance. So in this case, they can borrow up to $880,000 against this property. Now, the current loan is $580,000. So take away from $880,000, that means the client has a usable equity of $300,000. So as long as the client doesn't need to consolidate more than $300,000 worth of equity, they can consolidate this debt into the home loan without the need to pay any lender's mortgage insurance. Now, if you want to understand how to use this equity for other purposes, I've got a video up here that will show you what equity can be used for. So right now, I'm going to show you what we've done for this client, what they were paying, and what they are paying now with the debt consolidation. So if you're only listening to this podcast, please jump online, watch this YouTube video just for this section, showing you how much you can potentially save on this debt consolidation. Let's get to it. So guys, as you can see here, what I've laid out here is the current financial situation, right? So where they got a home loan, okay, they got car loan number 1, car loan number 2, and a personal loan number 3. So all that on those smaller loans is around $98,000, right? And you can see here, the rates are quite high here, right? So they've got an average rate of around 10.36%, okay? Now, they never consolidate those loans before because they just didn't know what to do. And after watching one of the videos and they understood that their property is worth a lot more than what it is, they thought about consolidating. And which is why they came to us, all right? So before the consolidation, their home loan repayment, also the total debt repayment on all 4 debts was $5,329 per month, right? So now that's what it was before we done the debt consolidation. Now let me show you what we've done for them and how we laid it out after the debt consolidation and how much we've saved them. Okay, so as you can see here, this was before and this was now. All right, so you can see here they got on the new proposal, there's 2 home loans, right? So one loan is for the original home loan, and we got them a little bit slightly better rate. Okay, so they were on 6.02 before, we got them a little bit tiny better rate of 5.95. All right, and we kept the remaining term as is. You'll see here that I have another loan, we call it loan number 2. And what that $98,000 represent is all the 3 debts that we've consolidated. And we got them a owner-occupied loan of 5.95%. We kept the loan term at 6 years because that's what it was pretty much what it was before, right? So we didn't want to extend it over a 30-year loan term. We wanted them to pay off these debts at the same time, but with a lower rate. So you'll see here, before their total debt repayment for these small loans was around $1,753, and now, right, it's $1,622. So that's about $130 difference, all right? So now the total loan repayment after the debt consolidation is $5,172, which is a savings of around $157 per month, or just under $1,900 per year. So essentially what we've done here with the debt consolidation is we've been able to better the cash flow with the clients by $157 per month or $1,884 per year, which is a significant savings, right? In comparison to, if you want to drag this on for a little bit longer. Okay, now, because you're saving yourself that much money, you probably won't pay this off in 6 years. You probably pay this off a little bit more faster, and maybe even 5 years, right? So you're going to better yourself financially by an extra year. So there you have it, everyone. That's a real life example on what we've just done for one of our clients. So as long as you have enough usable equity there, you can pretty much consolidate whatever loans you want into your home loan. So it could be, personal loans, car loans, credit cards, even HECS, some people do it. So there's no limitations. As long as there's enough equity and there's enough borrowing power there, you're able to consolidate these debts. So there you have it, everyone. I hope you enjoyed this video. Please give it a like, give this channel a follow. I hope to see you on the next episode of The Mortgage Chat. I'm your host, Tony Xia, and I'll see you next time.